Hello, everybody. This is Kenny Evans and David Berry, and welcome to It's What You Keep. This is a podcast dedicated to helping you learn how to keep more of the money you earn so you can turn your income into lasting wealth. Hey, everybody. This is Kenny Evans. What's going on, man?
Hey, Ken. How you doing?
I'm doing fantastic. Time for another episode, man. I'm excited about this week's episode. Is this back to question and answer?
Yeah, I love these episodes.
I do too. I love them because it takes away the mystery of whether or not we're actually talking about stuff people want to hear, right? I mean, these questions from the listeners, we know we're addressing things that are of interest to them. So that's always exciting. I know when I used to have to give speeches, doing the main speech was always the hard part. I couldn't wait to get to the question and answer part because then I was basically be set up, and it's great. So it makes life a lot easier.
I know exactly what you mean, and I always start with, "Hey, stop me at any time if you have questions."
In other words, save me.
Right.
I love it. Yep. So we've asked our audience to stop us at any time, and they've sent in some questions. So we'll dig right into those. And again, these are all based on previous episodes we've done, which is great. It means folks are listening and that we're driving questions. And this is how we all get smarter about how to use our income to create financial stability, financial health, and financial wealth. So without further ado, get into this first question. And this comes from our episode that we did couple of episodes that we did around payday and title loans. And in those episodes, we talked about how incredibly expensive they can be and how you need to try to find alternatives to them if you find yourself in a need for some money right away. And the question that came up, and it's a good one, and we kind of addressed it, is what if I need the money right away? Because I think, Dave, we did an episode, I think it was episode 12, where we actually talked about 5 alternatives to payday loans, right?
Right.
It's something where there are other choices to be made. And, we'll acknowledge that some of those, if not all of them, some of those alternatives, they're not instant fixes, right? You have to go and ask someone, you have to sit down with someone, which can be uncomfortable, and then they have to make a decision, or you have to go join a credit union or something like that. So this is about, these people feel they need the money right away. But in touching on this is where we really have to ask the hard questions, right? And have to be really honest with ourselves. So the first thing that comes to mind when someone says, well, I really need the money right now, because I've been in this situation where I felt like I needed the money right now. But if I really, really thought about it, took the time, stopped panicking, most of those times I did not need the money that minute. I wanted the money that minute because it would make me feel better and take the stress and anxiety away from this bill that I owed right away. So the sooner I could get my hands on that money, and that's what we're really dealing with a lot of times, is we're dealing with how we feel about the anxiety of owing this money. And so that is the first step. And I found that even true recently as my wife and I have been trying to get my business up and running. We've really pulled back on spending money. And what we found is you don't have, a lot of times you think, I got to go buy this thing. Amazon loves this. They created an entire interface for buy it right now, buy now. There's even I think we talked about it before. There is a documentary on that called Buy Now, right? And they design it so that you can address this need right away. But what we found is if you think about it for 2 minutes, you don't need to spend that money. And the same can be true when you feel like you need this cash right away. So that aside, let's say that you can't get over this feeling of anxiety, or something's going to come in to take your house away or your car away. That's an immediacy that's real. The next step, if you really need the money right away, is we have to get over any feelings of reluctance or embarrassment for asking for help. And that is the other part that people tend to struggle with, is they don't want to ask for help. I think it's interesting that you can have people that would rather rob a bank
Right, right.
than ask for help or try to get money some other way. And because it's the immediacy. And in robbing a bank, you don't have to ask anybody. You just go and do it. The problem is it's illegal. So we're focusing on legal ways to get this money that you need. And overcoming the embarrassment about it means going and asking somebody for help, a family member or friend. It is stressful. Understand that it is embarrassing, but how bad do you really need this money? And do you need it so bad that you're willing to risk or destroy your future financial health? Because that is what payday and title loans really end up doing. So again, from our experience, the people really don't need that money as urgently as they think they do. And if they do, the only way to ensure to get money in your hand immediately, legally, outside of a payday loan or a title loan, is to ask someone. And again, people may feel they don't have that option. But when making that decision, are you saying I don't have that option because I don't have any family or friends I can ask? Or are you making that option, or are you saying you don't have that option because you're embarrassed to go and ask someone for money? Does that all make sense, Dave? I feel like we're talking a lot.
Yeah, no, that makes perfect sense. Yeah, and I totally agree. I mean, if you're embarrassed because the need right away, if it is a need right away, the best way is to ask someone. But
Right.
if you ask someone and then you come to them with a plan and you stick to that plan of repayment, well, that takes a lot of the heat off. And this is a common occurrence. It happens. It
Yes.
just happens. I mean, the person you ask may look back on their lives and say, wow, I was in that spot too once.
I've been in that spot. I've done it.
Yeah.
Done it. Where people have come to me for money, and I absolutely. And that's a great point, Dave, that coming not just with your hand out, but with a plan, a solid, doable, believable, realizable plan of how you can pay that money back goes a long way.
Oh, yeah. Yep. It
And
shows
then-
that you
go
thought
ahead.
about it. You thought about the repayment plan.
Right. Exactly. And key to that, I'll end with this. Follow that plan.
Right. Exactly.
Do not alienate your friend or your family member by not following that plan. Because Dave, in that same vein where I've loaned money to people and they said they were going to pay me back and they don't, well, then in my mind, I just paid that much money for that person never to be able to ask me again, right?
Mm-hmm.
You don't want to be that person. You want to follow that plan that you come with. So that's a great one. But it really does come down to, do you really need the money? And if you do, can you put aside your embarrassment and come with a plan? I love it. All right. So our next question is one of my favorites, because this is something I actually live by and do in my own life. And a user asked, do you see any advantages to paying some bills like your mortgage in weekly installments instead of monthly? And the answer is absolutely. Now, let's focus on mortgage, because that tends to be the one that's the biggest and has usually that's most people's biggest expense, quote, asset, if you want to call it that, if it's making more money for you than it's costing you. But there's definitely a school of thought that says if there's more money going out than coming in, it's an expense, full stop. So that said, is there an advantage? And the answer is yes. If you pay your mortgage more than once a month, then what ends up happening, and really it's really kind of one option if you're dealing with regular payments, and that's to pay biweekly. So by biweekly, I mean once every 2 weeks, you pay half your mortgage payment. And what that ends up being is an extra payment per year. So instead of the 12 payments you would make on every month, you're making a half of a payment every 2 weeks. And there's 52 weeks in a year. So you're making 26 half payments, which comes to 13 full payments. So that's where that extra month comes from.
Right.
So when you pay that extra month, what you do is you reduce the amount of principal against which the mortgage company can charge interest. because they're charging interest based on what your running balance is monthly. And at the end of every year, you pay this, especially in the early years, you pay this extra payment. That is that much more payment that they can't charge interest in forever for the rest of the loan. It's not just that month or that year. It reduces the amount. And by reducing the amount of interest you pay, your principal payments start getting bigger. And I'm going to give a quick example here because I don't want us to run out of time today. But let's say you have a loan for a house, a $300,000 loan on a 30-year loan at 6%. And you don't have to remember any of these numbers, just a model, just an example. Mm-hmm. At $300,000 loan for 30 years at 6%, your payment is going to be $1,798, or basically $1,800 a month. So over the course of that loan, you will pay $647,500. Of that, $347 of it is interest.
Wow.
So you have paid more in interest than the original loan, just in interest. So in order, you have to pay the $300 back, plus you've paid another $347,000 over the course of that 30-year loan. Now, understand that's how most conventional home loans are set up. Now, the loan, again, is not what the house costs. That's after down payment or whatever, but we're just talking about the loan.
Sure.
So let's say you to have that same $300,000 loan, same 30-year term, at same percentage, 6%. So your payment is still $1,800 per month. If you pay biweekly, again, and again, you can either pay one extra payment at the end of the year, but most people like the biweekly because it spreads out the quote unquote pain over time, over the year. Then you will have, not only do you pay the loan off 5 years and 4 months early, so you pay the loan off in 24 years, 8 months instead of 30, but your interest payment drops down over the course to $275,000. That is almost $100,000 less in interest that you pay over the course of that loan. And you haven't come up off of any additional money. You have just paid faster.
Right.
By paying that extra. So again, that's an example. And of course, the more monthly payments you can do in a year, the faster this goes down. But this is just, you're paying biweekly. So you're paying an extra payment a year by going biweekly. Now, again, if you do biweekly, then that's what the mortgage companies are going to expect. There is no skipping payments or anything like that. They still want to see a full payment per month. And by paying biweekly, you're actually paying a little more excuse me, David, sorry about that. You're actually paying a little bit more than your payment a month, but it's small in comparison over the course of the year. And really, most people, based on how they get paid, they don't notice it because it's still, for them, over 4 weeks, I'm paying one payment.
Right.
But the savings is just astronomical. And like I said, you can't. The higher the loan, obviously, the more impact this has. And I recommend this. So a great question. And you got any comments about that or any questions, Dave?
Yeah, no, I think that, when people look at this, they may think that, wow, that's 24 years out. Wow, I can't even imagine that. I mean, that's 24 years. But yeah, you're right. The numbers make sense, but that's a long time. But I think we should think of it as, you're paying down the principal. Even if your plan is to move in 5 years, well, if you run that same calculation, your principal is still going down, which means that you have more equity in the property.
That's 100% true, Dave, and a very good point. When you look at this over what they call the amortization of the loan, which is basically just showing you how much of your money is going towards principal and interest on a monthly basis, you would see, or yearly basis, you will see that using the conventional monthly payment on the 30-year loan, you don't start paying more principal than interest until your 10th year. So you're still, the first 10 years, you're paying more money to the bank that they put in their pockets than you're paying towards your principal. Whereas on the biweekly model, you hit that point in 4 years.
Mm-hmm.
So you start paying more towards your principal after 4 years than interest versus 10 years using the conventional way. And to your point, if you decide to move in 5 or 6 or 10 years, you got that much more equity built into the house. So
Right.
your check at closing is bigger. Yeah.
Yep. No, I totally agree.
All right.
Totally agree.
Cool.
Good. All right.
So how about you, Dave? You got any questions from the fans out there?
So the next question, which is a really good one. So the listener asks, do either of you save hard/petty cash? Which is a good question. I'd have to say that no cash is petty. It's all important.
Let's start there. Spare change. What do you mean? What is spare change?
Right. There is no dollar bill that I would walk away from if I tried.
There you go. Go ahead.
So it is all important.
But that's a term that's used in business and stuff. It's kind of a slush fund for businesses.
Sure, but it really doesn't have a line item.
Great point.
Right. But I guess I would say that it's good to have some hard cash available, especially for unexpected giving opportunities. I was sitting at my desk at the house, or just sitting at the house watching television, and the doorbell rang, and it had been snowing, and it was cold outside, and it was a few kids looking to shovel my driveway for $30.
Okay.
And I was thinking, that is great. The kids wanted to work and they wanted to do something. And then I thought, well, the driveway, what about the rest of it?
I got sidewalks too.
Right, exactly.
I got to get to the driveway.
But that is an opportunity where, these guys are not going to have Zelle accounts or POS, machines in their back pocket.
Right.
So this is an opportunity for me to give, take from that petty cash and give these guys a little bit of money just to shovel that driveway. And I get the same thing with, kids, in the neighborhood selling Girl Scout cookies. They come to the house and they have typically a POS device, but some of them don't.
Yeah.
Some of them don't. Their dads are usually
new.
with them.
That's new. Back in the day, it was a can.
Right,
it was
exactly. Right. So it is good for those opportunities. And also, a lot of times, you'll drive down the street and you'll see somebody homeless asking for money. And
Right.
it is a good time. And we believe that it's a good deal to just give them some money. And that comes out of that, that cash, because they don't have POS devices either.
No, they generally don't. They might have a cell phone and a dog, though, but not.
So it is
but they
good.
don't have POS devices, right.
So it is good to have cash on hand just for those accounts. But what I will say is that is important too. And that should be tracked. When you have a budget, that petty cash or that hard cash that you use for those opportunities, that should be tracked as well. And it should be reviewed, because it can get out of hand. If you're not looking at it, it can get out of hand, and all of a sudden this money is just going out the door and you can't account for it. So you should, track that money and review it periodically just to make sure you're not going overboard. Or if you need to increase the amount that you put into that line item, well, do that, but you should review that as well. So it's good to have for these unexpected giving opportunities.
So to that point, what do you suggest? Replenishing it monthly or every quarter? Or it depends on what the value is. But go ahead, I'm listening.
Sure. No, I think that when you review it and track it, then you can decide. I feel like I should give a little bit more. I should have a little bit more on hand, or I should have a little bit less on hand. How many times does it snow?
Got it.
Girl Scout cooking selling season is, not every week.
No, it's a yearly thing, kind of mostly, but yeah.
So review it periodically, and it's okay to have it on hand, but track it and review it.
Last question I have for you on this one, Dave. How do you hold that? Is that something in an envelope at your house, or you got some in your pocket, or what is it?
Yeah, so usually it varies. Some people have it in an envelope. Like I do that. I have money in an envelope in a bin in my closet, and so when somebody comes along, I just run up there and grab it out. I mean,
Okay.
you don't have to, I mean, it's hard cash. So whatever you can store out of place that won't get lost or thrown in the hamper.
Right. And then somebody else's petty cash, depending on who's doing the
Exactly.
laundry. I got it. Thanks, Dave.
Yeah.
Any other questions that we can
No,
answer?
so that's all on that one. So the last
Okay.
question, which is a really good question
Okay.
for married couples,
All
joint
right.
or individual approaches to finance.
Hmm.
So this is a really good question that a lot of people find themselves in, where you've got two people and two finances or one finance, two goals or one goal. And I would say that this is a conversation that you guys need to have.
Okay.
You guys really need to understand that you have to be on the same page in terms of your finances and in the same book. A lot of times we say,
Same page, different book. That's
right.
that's still a problem.
A lot of times we say, listen, we need to be on the same page. And what we really mean is you need to be on my page.
Right.
No,
This is where that compromise thing comes in.
exactly.
Right?
You have to have the conversation. And, if you guys have two different books, take your books, rip out pages and make one book. But just make sure that you're on the same page. And because you guys are on the same team, working
Right.
toward the same goal.
Right.
And if you're
So
not, that's another discussion you have to have.
Gotcha.
So
Go
I think
ahead.
that you have to be on the same page, same goal. And it's a discussion you have to have. Now, it's okay to have, I believe that it's okay to have different accounts and different responsibilities.
Right.
Like I know one couple, they divided the different bills. You pay the mortgage, you pay the the utilities. And that's how they, went about their plan. But I think that is okay. But having the same plan, you can have different accounts, but they should be open to one another.
Okay.
There shouldn't be, I don't believe that there should be accounts that one person has that they're socking money away that the other person doesn't know about. Everything should be in the open. And one of the things that does is that it holds one another accountable. There's
Absolutely.
an accountability to the finances that affect both of you.
Right.
And so having everything open, makes things a lot easier. And so that's a communication that must be had between, the two.
Okay.
So, yeah,
Yeah.
I think that, separate accounts makes, tracking easier too. You can say, well, this is my, account for lunch or, food. Well, if I'm, if it's mixed up between, one account, money's coming out of one account, it's very difficult to separate that. Was that my lunch? Was that your lunch? Was that, something else? But if it's separate, then you can actually track it.
Yeah, we certainly don't want to make this a marriage counseling conversation. But there's some things that are important here, and that's where the conversation comes into play, because anytime you're dealing with money, I don't care if it's your spouse or your business or whatever, there has to be a level of trust. And with that in place, the rest of this becomes a lot easier. I'm not saying it's easy. I'm just saying it's a hell of a lot easier.
Yeah.
I like the suggestion about, separate and joint and counts and, being able to track and everything. But that's definitely where, and the openness, right? I'll be honest with you. In my situation, my wife has access to my accounts, but she never looks at them. And part of that is because we're on this, like you say, we're on the same page. And like I like to say, we're pulling in the same direction. And once that's been established, then everything becomes about that. And so we're all focused on doing our part to make sure we're successful as a family and as a couple. And then the rest of this becomes just numbers in a book. And I like that. Yeah, it's a great question. But I used to think I have to have one account that she's not looking at, because if I want to do something for her as a surprise, really, because that's honestly what I'd be thinking. I don't want her to know that I'm buying, X, Y, Z. And matter of fact, I think Valentine's Day is this week, isn't it?
It is, actually is. Right.
Yeah. So yeah, that kind of.
No, that's a good point, because we have one Amazon account, And,
Right.
for Christmas and birthdays, it's don't look at the account. Don't look at it.
Well, we have one Prime account that we share, but you have to log in separately
Yeah.
for ours. So I don't know what she's buying. She doesn't know what I'm buying when it comes to Amazon. But yeah, that's a great example. Great example.
Yeah.
Good questions.
No,
Good
these are
questions
great
this week.
questions. Keep them coming.
We do. We want more questions. So we're just at time, Dave. It was a good timing today. Again, really appreciate you guys listening. We're having fun doing this and definitely enjoy answering your questions. Hopefully we've touched on things that are important to you and ask that you just keep listening and keep sending questions. We love it. All right. Is that all we got this week, Dave?
Yeah, that's it.
Okay, my
Very
man.
good.
Remember, folks, check out our website at www.keepitpodcast.com. That's www.keepitpodcast, all one word.com. And we'll be checking you out again soon. All right. With that, we're going to close it off. Dave, thanks a lot, man. Appreciate your time as usual.
Thanks a lot, Ken. Talk to you later.
All right. Take care. Bye-bye.
Bye.
Hey, everyone. Thanks for listening. Please be sure to visit our website at www.keepitpodcast.com. That's www.keepitpodcast, all one word.com. There you'll find links to websites and blogs related to building wealth and other useful information. You can also leave comments about our show and listen to or download all our shows after they air. Also, as a reminder, this show is for informational and entertainment purposes only and should not be used as financial advice, as we do not know your specific circumstances and are not your fiduciaries. Please consult with your personal financial advisor before making any investments or financial decisions. Thanks again, and we'll see you next time. In the meantime, remember, it's not what you make, it's what you keep.